So traders, simple ways to simplify your trading and why you should actually try to simplify your trading. I preach a lot on Twitter about having, one time frame, one pair, one session, one setup and everything like this. And that's not what this video is going to be about. I've talked about that a lot on the channel before as well, and kind of why I think that is, the best way to go about your trading. And the main reason for that is it just makes it so much more simple. If you're only having to search for setups on one pair, you're only having to look at one setup on one session on one time frame, everything becomes a lot more simple. The main reason why I actually talk about this, especially for one setup or one pair, is it makes your trading very easy to just copy and paste setups. It makes it easily repeatable, which is obviously what you want. You don't want to be looking at the charts very confused on what you actually need to do next. Whereas if you have something that's very simple, a strategy where it only requires three, four confluences, let's say, and those are easily identifiable on the markets. So you sit down, I open the charts, I instantly know what I would need to see for the trade to actually present itself and become valid for me to actually start risking my money on that particular setup. And let's say you have 4 pairs, you are trading 4 different setups on these 4 different pairs, multiple different time frames, multiple different sessions. Just think about the amount of times which human error can actually come into play when you're actually trading in this manner. Let's say I'm trading gold and I have 3 different setups for when I'm trading gold, and I use about 4 or 5 different time frames, let's say. This doesn't seem too out of the ordinary for most people. They do their top-down analysis for maybe like the daily, the 4 hour, the hour, the 15, the 5, the 1 minute for entries maybe, and this is relatively normal. But just think, if you're trading like this, the amount of mistakes which can be made, not on purpose obviously, but the amount of mistakes which can actually be made when you're having to sift through 5 different time frames, search for 4 different setups, you could easily miss one, or you could mistake a setup for something which isn't actually a setup, and at that point you're just kind of risking money for no reason, just because if you're looking through that many different time frames for that many different setups, it's very easy just to find a setup. Obviously it's not going to match everything perfectly, but you could find a setup relatively easily, especially if you're flicking through loads of time frames. Whereas if you simplify your trading to only look for one setup, this is obviously a lot easier. You open your trading view. This is what I do personally. I open a 15-minute time frame, and then I look for the setup. When I actually look at the charts, I'm going to break it down for you guys. Immediately what I do is I look for a break of structure. So if we go on the charts here from yesterday's trading price action, so Thursday the 21st of September, I actually did take this trade, which dropped down here. If we use the replay tool and go back to this sort of area, so I go on the charts at around 8 a.m. So if we quickly move this along to around 8 a.m, which is here. So what are we looking for? So immediately I know that I want to see a break of structure. So where was the immediate structure? We obviously have this low here. You could say this low here as well, but if it breaks this low, it will most likely break this low too and then come back in, and that is how I actually get my entries. You guys know it. It's very simple trading. All I want to see is a break of structure and a retest into the consolidation to then drop lower. How I get my entries, that's for a different video. That's for the mentorship, link in the description. But now I'm looking at the charts, that's exactly what I want to see. Obviously we could look for a break to the upside, but because we've obviously just broken these lows here, we're continuing to the downside, so we're actually looking for further short positions. So when we actually play this along, you guys can see that the candle which actually broke this structure here also broke this structure here, which then gives us another sign, an extra sign that we are just going to continue bearish in this particular session. So then we look to get our entries. We do our entry confluences. You want to have a reason that the trade is actually valid, so a reason why you can actually see and then potentially look for your entries. So obviously we had this break of structure, then we obviously have imbalance left behind here. So then we want to see price obviously come up and fill this imbalance. So when price does that, that's when we actually get our entry. If you're looking in terms of filling imbalance, This is literally perfect to the pip. And then, you know, price drops down. Once again, we have the new structure point here. Price is broke structure. Again, another sign it's going to continue lower. What happens? Price retests back into the structure and then drops. So the same thing happened again. Obviously, if you missed the main entry, could have got a nice re-entry here, depending on your entry models. But very, very simple. When I went on the charts, I knew exactly what I wanted to see. I wanted to see a break of structure, and then I looked for my entry. Simple as that. Whereas if I'm going on the charts, I'm like, okay, so the 15-minute time frame is doing this. If it breaks this low, I'm entering here. If it breaks this high, I'm entering here. Then you go on an hour and you've got to match it all up. And then you've got to be like, oh, well, I got this set up as well. This could present itself. So you're kind of back and forth and not really too sure on what you're actually looking for. So the reason why I actually do this and stick to one simple strategy is because it's easier to master and perfect. If you're trading multiple different, you know, strategies, setups, pairs, timeframes, it's a lot harder to actually master this than it is just simply sticking to one very, very simple strategy, because you can't really make a mistake if it is that simple. You guys probably saw it on my charts too. They're very, very clean. There's not any clutter on there. There's not leftover lines or areas from 2 weeks ago randomly across my chart. Every single day, every single time I go to trade, I need to make sure it's very, very clean. This again simplifies your trading. You're not being influenced by levels which you had marked last week, 2 weeks ago, 3 weeks ago, a month ago even. I just want to keep it nice and simple. And actually doing this, so you have your simple setups and you know exactly what you're looking for, it gives you more time to journal. It gives you more time to backtest and refine this simple strategy. And I do think there's literally no point in overcomplicating your trading with multiple different setups. Obviously on the channel before, I've done it where I'll trade like an account flip or I'll trade prop firm challenges, and I obviously trade that differently to my personal account. But the only difference is the risk. I'm trading different strategies, so to speak, but it's only really based on the risk management. The actual premise of my trading strategy is always the same. It has been the same since I actually started trading. Obviously, I've tried new things, I've tried adding things in, but I always just end up sticking to, okay, here's the structure. If it breaks the structure, I'll look to trade in that direction. If it doesn't break that structure, I won't trade in that direction, or I simply just won't trade at all. That's how simple my trading is. If I haven't seen a break of structure in the session that I'm trading, which I always trade London session, so if from 8 AM to let's say 1 PM, if I haven't seen that break of structure, I'm simply not trading. And I say it's simply not trading because it literally is that simple. And the entry model obviously depends on how you trade and obviously the time frame you're using. But the one I use just based on imbalance is very, very simple. And a lot of people just overcomplicate it. They want to find the new holy grail strategy. People wanting to, people just invent their strategies nowadays. Obviously, every strategy is different, so no one can trade the same as another person. Obviously, you can learn from someone, but it will never be the same trading style. So you guys need to look out for when you're looking on Twitter and everyone's like, oh, I found this new strategy. It's called blah, 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 blah. It's just the same as someone else's strategy. They just renamed it, made it their own, and now they're selling it to you. If you want to learn how I trade very simply, obviously you guys have seen the simpleness of this strategy on my YouTube channel before, and how I only really take a couple of trades a month and I make enough percentage profit wise to live a very, very good life from simply just trading. So remember guys, it's not about having 5 different pairs, 5 different strategies on 10 different time frames with 5 different screens making you look like a professional trader. It's not really what matters. You could just trade from your laptop, one pair, one setup, one time frame, one session, and that is the sweet spot. That's what I found personally. You guys might find it's different for yourself. Maybe you might prefer trading 3 different pairs. It might fit your time zones better, and this is obviously okay. But that's what works for myself, and if it works for you too, comment down below, and I'll catch you guys in the next video.